Hello, welcome to the weekly technical analysis review for Monday, May the 27th. I'm Rafi Wajan at XM.com, and for this week we're going to be looking at the Aussie dollar, the pound yen, and WTI oil futures. So let's start first with the Aussie dollar pair. We can see from the momentum indicators that there is still some upside momentum, even though the pair has lost some steam. The RSI has flatlined even before reaching the 50 neutral level. Those stochastics are pointing upwards. So if we do see further gains, resistance should initially come at the 161.8% Fibonacci retracement of the uplift from 0.7052 to 0.7205. So that's around 0.6957. Higher up, we've got the 138.2% Fibonacci at 0.6993, but the Aussie dollar would really need to reclaim the 50-day moving average around 0.7050 in order to erase the downside risks and potentially help the medium-term outlook become neutral again. At the moment, the neutral term picture is rather bearish to the downside. We've got the 0.69 handle, that's the 200% Fibonacci extension. Lower down, we've got the 0.6865 level. That's been capping prices for the past week and a half. But if you do see prices slipping below that key support, the main support below that is the 0.68 handle. That's near the 261.8% Fibonacci extension. And then below that, prices could head towards that 10-year low of 0.6746, which we saw at the start of the year. Let's now turn to pound yen, which is looking rather bearish both in the short and medium terms. The RSI is currently in oversold territory just below 30, so we could be due for an upside correction at the moment. Support is being delivered at the 61.8% Fibonacci retracement of the uplift from 132.49 to 148.86. If we do see prices bouncing off that level, they could then head towards the 50% Fibonacci at 140.68. Above that, we've got 142.60, that's the 38.2% Fibonacci. But pound yen would really need to climb above the moving averages in order to erase the downside pressure and turn neutral once again in the medium term. So we're really looking pound yen having to aim for the 145 handle, that's the 23.6% Fibonacci. We recently had a bearish crossover between the 50 and 200-day moving averages, reinforcing the bearish structure in the medium term. So if that trend continues, the next support to watch would be the 136 handle, that's the 78.6% Fibonacci, and then prices would then head towards the 2-year low of 132.49 set at the start of this year. And our final pair for today, or rather instrument, is WTI oil futures. At the moment, it's looking fairly bearish for oil in the short term. The stochastics, they are attempting to recover from oversold levels. Looking at the MACD, though, we can see the deterioration in the short-term picture with the histogram turning negative. There is support, immediate support coming from the 100-day moving average. If prices were to slip below that, the next support would come at the 38.2% Fibonacci retracement of the uplift from 42.53 to 66.57. So that's around 57.39. Below that is the 50% Fibonacci at 54.55, which, if broken, would increase the downside risks, and we could see oil prices heading towards 51.71, the 61.8% Fibonacci, and then 47.67, that's the 78.6% Fibonacci. To the upside, though, we do have several hurdles. First, we've got the 200-day moving average. That's currently at 60.18. Higher up, we've got the 23.6% Fibonacci at 60.90, and then clearing that could bring another resistance level at the 50-day moving average at 62.13. So several challenges before oil prices are able to head back towards that 6 months high of 66.57 57 reached earlier in April. Also, oil needs to beat that high in order to resume its uptrend and prevent the current neutral picture in the medium term turning bearish. So that's it from me. Thank you very much for watching, and have a great day.